Hi, guys. Thank you so much for joining Rob and I tonight. Rob has some great information that he wants to share with you, and it was important to me that everybody hear this. This is not about buying and selling houses tonight. This is about taking care of you. And it's about finding ways to protect your mortgage during this period of time. There's so many tangles of mess that are of predictions that are being put out there, and we want to kind of help you sort those out and let you know what you can do to protect your mortgage. So with that, Rob from Oriana Financial Wealth.
So we are here. So thanks, Melissa. So, and like Melissa said, this isn't about, trying to grab the next mortgage or trying to do the next sale or the next listing. This is really 100% about taking a look at your options, understanding what's out there, understanding those products, and maybe even going back to your lender and see if you can negotiate something that might work a little bit better for you. One thing we do understand, and I've seen the statistics, and CMHC's been looking at this, and they've been coming back to us and saying, okay, we're going to have a deferral problem in about 4 to 5 months when all of a sudden all these high payments start hitting the mortgages. And this is where their panic is starting to come in, because they keep talking about a big market correction and being more strict on the demand. And, these are things, this is about planning ahead. This is about looking at your situation now and also planning ahead and trying to put your mortgage in a position where if we do go through a second run of this, or how can we fix this, or how can you position yourself in a better way so it doesn't happen to you, okay? Or if you're already in that position, what can you do right now to fix it so moving forward you're in a better position, okay? And this is really about advice. And I have no problem, and I know, Melissa, you have no problem with this either. Feel free to contact us, reach out. You got questions. We're not here to solicit, but we can try to steer you in the right direction. Whatever we can do to help, that's really what this is about, and we can take it from there. So what I'm going to do before we just get right started is I'm just going to put the presentation up, and it shouldn't take that long, hopefully no more than 30 minutes. But if you have any questions, we will ask at the very end, and then we can definitely get started from there.
Yeah, and feel free to type in the chat if you have questions as we go. That's great. Because one of the problems, I mean, one of the things that has been happening is the government has been saying you can go ahead and get your deferment of your mortgage payments, but it never really was explained how that will look like at the end of those 3, 4, 5, 6 months. And I think that's a concern as well, right, Rob? Like, people are sitting there, what can we do?
Well, I don't think even a lot of people understand what's going to happen in 5 to 6 months, right?
That's right.
So like I said, like CMHC is calling it there's a special name they have it, but it's the deferral crisis that's going to happen. They didn't say crisis; it's probably a bad way of saying anything, but it's going to be a wake up call when your mortgage goes from being $1,500 a month to all of a sudden now it's $1,800 a month because the deferral just got added on for the next 3 years, right? And that extra $300 a month might not be affordable. So let's look at all those options, because you don't know coming forward what could happen, right? And that's exactly what this presentation's about. So it's hopefully I get this down right, but it's 5 ways to recession proof your mortgage. So we are stepping into recession. Nobody's going to argue that. We're definitely going to get into higher taxes in another 2 to 3 years. I don't think anybody's going to argue that. We have to pay for what we've just gone through. Okay, so it's going to happen. But not all mortgages are built the same. And it's important to understand what you have. And this might be a little bit more generic, but it is also going to give you some ideas stepping forward that you know what to do. Okay.
Yeah.
So just going to kind of go through an overview. So we're going to look and review the 5 strategies. We're going to explain why, the cost, the how, and how this is really going to work. We're going to answer any of your questions that you have. We'll do that at the end of this. So if you have any questions, just take down some notes by all means. I know Melissa's going to ask me some questions towards the end, just so if something's not actually in there that's explained, that we can take care of it. And I do have to apologize, because if somebody else does join the meeting, I might have to stop and go back just to pick that up. I have to check every once in a while that there's nobody else that's joining in. Okay. So for those who don't know me, I've been with Oriana for the last 15 years, financial planner for the last 25. being in this business, it's, most people who I've spoken to, I'm not going to get into the details. I'd rather kind of get more in the meat potatoes, what we can do to help you. But I do have the experience in this, and I have seen the market corrections. And like yourself, Melissa, I know you're going to say this, you ready for this, but we've both back in the 90s, we do remember what happened in the market. And even though this is different, there is a lot of similar trends that are going on. And a lot of people did struggle with their mortgage payments, lost their houses. I don't think we're going to see it in that kind of scenario, but this comes right back down to that repositioning and not being prepared, right? And this is really what we want to try to get forward. Mm-hmm. And for anybody else, I do specialize in wealth building, and so does Melissa. That's what we do. This is how we built it. It's not something we're here to do tonight, but down the road, if you ever have any questions on it, by all means, ask us. We can certainly help you.
Yeah.
So let's look at the 5 strategies that we're going to go into more detail. The first one's going to be about adjusting your payment. I'm not going to get into a lot of detail here because we are going to get into more detail in the other slides about what each one is and how you can do it and how to approach your bank. Okay. The second one is refinancing and refinance your existing mortgage. Add a HELOC, home equity line of credit, which has been a great product if you can qualify out for it. Just love that. Renew your mortgage early is what that says. Is that blanked out on your side, by the way?
No, it's only because we are the audio. You're okay. It's good. It's just you can move the gallery shot around. Yeah, you're good.
Perfect. Okay. And there's obviously the big one that a lot of people have been using, which is the skip a payment or the deferral program that was offered by the banks, which has been, fantastic. Over 800,000 Canadians have used that. I know one particular bank, I'm not going to advertise for them, but they did over 400,000 deferrals alone. Just kind of gives you the size and how big this really was. And a lot of this took place in Ontario, Alberta, Quebec. Like, I don't think any province walked away without having to use the deferral payment or the skip a payment option. But I also know there's a lot of people that took advantage of it that didn't need it, which is unfortunate because I think they might pay for that one down the road. Okay.
I was going to say there was a lot of, misunderstanding and potentially misuse of that strategy.
Yeah.
That will bite us all in the butt. I'm going to go on mute just while the dogs bark. Go ahead.
Oh, good. The things we don't plan for when you're live. That's good. Okay. So let's talk about the adjust your payment. So one of them is about re-amortizing your mortgage. Okay. So, and I'm going to give a good example of this. So when you re-amortize your mortgage, you might be taking it from a 20-year and you could take it out to a 30-year AM. And what that's going to do is decrease your payment. And we're going to show a slide how that would actually work and how that can help your monthly expenses going down the road. Okay. Not all banks will do this. Some will take it back to the original amortization. Some won't. So this comes back down to, and I always stress this when you're getting a mortgage, because people always ask me, what's the best rate? What's the best rate? What's the best rate? This is where your product comes into play, because if you might have got the best rate, but you might not be able to do this, right? And you know what, going down the road, this might be a learning lesson in saying, okay, what kind of options do I have with this mortgage? Because I might need it, right?
Rob, can I just ask you a quick question? When you talk about re-amortizing the mortgage, do you have to be requalified to do that? Or is that a simple ask?
So some banks, it could be a simple ask to take it back to the original amortization. Like I said, some banks will do it. Some will do it depending on your situation only. So they might say, okay, yeah, you know what? You've been hard hit. We understand. We're going to take it back. We're not going to charge you. Typically, when we re-amortize, though, yes, it is a lawyer fee that's involved, and then you have to redo the mortgage. But like I said, some banks have been forgiving on this. So if this is a solution, it might be something to bring forward to your current lender and say, hey, I'm really, really tight. What can we do? I heard that I might be able to re-amortize it so that I can take my payments and make them smaller. Okay. And I do get that some people don't want to go, hey, I'm 15 years in my mortgage. I don't want to bring it back to 25. And I'll talk about that and how you can alleviate that down the road. All right. So it's just a temporary solution that recession proofs your mortgage so that you have the payments to get yourself through. Okay. Stop your accelerated payments. So a lot of people, even when I set up mortgages, we always recommend accelerate your mortgage payments. You do it automatically. Some people probably don't even realize they're even doing it. It's that automatic, right? So it's biweekly accelerated. You can actually stop that and you can just do a biweekly regular, and that'll drop your payment down by $200-$300 sometimes. So it's a big deal. So we'll also talk a little bit more on that one. And let's talk about the re-amortizing your mortgage. So this would decrease your mortgage payment and provide a temporary aid. And that's really what this is, okay? So now I know in here when we did the slide, there's no cost to do this, but we have spoken to several lenders. And like I said, a lot of them are doing this on a case by case. So, just don't think you can walk in and do it. It's something you want to go approach your bank. A lot of them have been very, very good about it. And not all banks will do it. They treat the strategy different. So it's definitely a conversation that needs to be had, okay? And like I said, they're probably going to look at each individual and their situation to see if it's something that needs to be done or something that can be done. So call your bank and lender and see the options that you have when it comes to the amortization. And I know we just answered that question.
Rob, if they have a broker, a mortgage broker who brokered the deal, should they be calling the lender or the broker?
You can definitely reach out to the broker. I know even on my side, because mortgage papers do change all the time. So there's always a lot of adjustments. And I can give you a good example. For instance, one of the lenders I had, they never allowed the skip a payment option. And then COVID hit and they just put it right out there and said, guys, we need to support our customers. We're going to do the skip a payment option to get people through, which was fantastic. And ironically, they did that before any deferral program even came out. Like this, they did it way out in March. So they're usually right on top of it. But that's because a lot of those lenders just do mortgages. So that is their business. They want to make sure. And a lot of people might not understand this, but the bank really does not want your house, okay? They really don't. I know a lot of people think they do, but they don't, right? They want their money, but they don't want your house. So they're going to go the extra mile to say, okay, how can we make this work so that you're not going to lose your home? How can we make this work so that your payments are less so that you can afford it? So they will work through it, and no insurer in Canada wants your mortgage. None of them want your house. They want to make sure that you're staying there, and keep that in the back of their mind. Like they are going to do things. And I'm going to give you an example of the re-amortization example. But if you have a current mortgage, $300,000 left, current owing after, I don't know how many years that was supposed to be. It's now 244 when you started. Your amortization is currently 22 years. And you're going to switch it now to a 30-year amortization. Your interest rate does not change. You've just now increased the length of time to pay off the mortgage. So that payment would drop from $1,261 to $1,026. And a lot of people in our area, in the GTA area, have a much larger balance than $300,000 for that point, okay? Now, one thing you can put into consideration, once this passes and you're good and you've got the extra income coming in, all you have to do is increase your payment back to $1,261 to get back on that 22-year amortization. Okay, so all you're doing really right now is just giving you some breathing room.
And they don't need to actually re-amortize. They just need to up their own payment, and you're on the right track again.
Yeah, and most lenders have a 20% prepayment privilege, so that's not a hard thing to get to, right? So you can easily get back onto your original amortization schedule just by increasing your payment when you're ready to do it. Okay, so it's just like I said, this is about the breathing room to get through. And let's face it, like I'm sure every family out there is suffering in one way or another. We're all suffering different, but in one way or another, we all have our challenges. Okay, and sometimes it might not even be income; it might be something else in the household. Listen, I'm doing fine, but when I got to teach my kid how to do his homework, I'm challenged.
Yeah.
That's not my job, but
There's a whole bunch of people who are with you on that one.
Yeah, I'm sure, boy, because that's that one just keeps my mind ticking. But that'll reduce your monthly mortgage payment by $235 a month on that particular example. So it is something worth looking into, okay, as a good way to do it. So let's take a look at the accelerated payments. So to reduce your monthly payments and then to go back to the original payment. So we can do this. So you can usually go online with a lender and say, you don't even have to call them. Most of these lenders will allow you to do it right online, but you could take your accelerated payment and change it to a monthly or a bi-monthly or something that's a much smaller payment, okay? And that would immediately, create a change. And most lenders, again, it says there's no cost to do this. I've seen some of them might charge $25 to do it. Okay, big deal. At the end of the day, it's worth it. But again, call your bank, call your lender, go online. The options are there for this one. And like I says, you might be able to do this online. I don't know one lender that doesn't do it online. I think they all do at this point, but it's definitely one of the best options. First thing to consider before you do anything drastic, if it helps bring your payments back in line. And just to give you an idea, same thing again, looking at a $300,000 mortgage, one that's accelerated, one that's not, your interest rate is still 3%. We're just going to throw that one out there. But your biweekly payment, if it's accelerated, would be $631. If you changed it to a non-accelerated, it's $582. Okay? So you can save a bit of bucks on that one also. And it's a good way to reduce help your monthly expenses. Okay? So refinancing. So this is one option, and this kind of also ties into the HELOC product if it's available to you to do this. But this is about adding extra monthly cash flow into your life, right? So if you've been laid off or you got stuck and you just couldn't do anything, this is a good way to consolidate debt. And consolidating debt is probably one of the biggest things. Like I always push that when I see debt on the table. It's like, you know what, take it back into your mortgage. Let's reduce the payments. Let's accelerate the payments. It's a faster way to get rid of your debt than to try to pay off a Visa card over the next 100 years, because that's how long it's going to take, right? Same with line of credits and so forth. Can
I ask a question here? Mm-hmm. If we're talking about someone who has been laid off temporarily or not, is there a possibility that they go in to do this and then the bank says, no, you don't have enough to do that? Not only do you not have enough to do that, but you don't have enough to carry the current mortgage.
Sorry, I was letting somebody in. I totally missed
the question. Okay. So I'm asking if someone goes to do this, they're in a situation where they need to be to consolidate, right? So they're going to pull it all back into their mortgage and they're going to do this. But while the bank is sorting this out, or the lender is sorting this out, they determine that, wait a minute, not only do you not have the income currently to support the consolidation, but has it ever happened where it's like, not only do you not have that, but you can't even afford your current mortgage and it gets pulled back?
Okay, so we'll step back on the pullback one in a minute. So it is quite possible that you might actually get in a situation where, hey, I need to refinance. And then we go in and we take a look at it. We try to refinance. And the biggest problem with refinancing is we can only do it up to the 80% of the appraised value of the home. So sometimes we can't get all that refinancing that's required to do it. So that can be one difficult challenge. And the second one is maybe they just don't qualify because now they've been off work for 2 months.
Right. Yeah.
And now that's become another issue. So now all of a sudden they don't even qualify. So then you're down to 2 options at that point. And one would be to sell, pay off all your debt, start at a clean slate. And for anybody that's listening, and let me say this, and let me be very, very clear about this. The one thing you never, ever want to do to your credit bureau is miss a mortgage payment. Okay. You only need to do that once and you are going to be stuck for the next 7 to 9 years. Like, you just don't want to be in that position. So you know what? Pay your mortgage first, then it's hydro food or whatever. And if you're in a position where you can't pay the mortgage, then get out, sell, reestablish, rebuild. And you know what? This is something we can do for you also. Like, it's not about, don't think you're losing out or you took a step back. Sometimes we need to take a step back to go 2 steps forward. And maybe sometimes that's the situation in this particular case, right? But don't be afraid, or don't be ashamed to do it, or don't be afraid to reach out.
It's funny. I was going to say, sorry, on your last slide, just to go along with what you're saying, is don't be silent. Like, you can't hide from this situation. It's happening, and there are people like Rob and myself who will help you through this, but don't stay silent, because I find even with the banks, if you communicate, that is far better. You're going to work towards a solution, because if you're not paying, I mean, they got millions of people. You're not paying. They don't care. Reach out, communicate.
You ignore them, they're just going to go right to collection. You do talk to them, at least they can do something. But that's the one thing. And you don't want to be in a situation where you didn't talk to them, mortgage payment goes bounced, and then all of a sudden now you can't even get a mortgage. And I'm going to go back to the last question you asked before. It's like, okay, what if I go into the bank and all of a sudden I don't qualify, right? I don't even qualify for my existing mortgage anymore.
Correct.
So keep something in mind here. So a bank will always send out your renewal, and when your renewal comes up, you might not be able to negotiate the rate as well as you would like to, but you can always still sign back. Okay. Very few lenders will pull the mortgage. There might be one or two out there that would do something like that, but most of them won't. And the big six certainly aren't going to do it. I'd be surprised if I was to see that happen. And like I said, they don't want your house. They just want to continue the payments. So if they can find a solution, they're going to look for it. Okay. If you get the right person, don't get me wrong. There's probably some people in there that don't know what they're doing, but to the most part, most of them are going to try to find the solution.
Yeah.
The cost to refinancing existing mortgage. So now this is not something that's going to be free. So this is something where, there's going to probably be a mortgage penalty. There's going to be lawyer fees. There's going to be, the cost to it that's also going to be associated. Over the long run, though, two things can happen. One, we could set your mortgage up a little bit better. So maybe we can do that HELOC where you don't have to do it again. Or it just, maybe it just gives you that extra equity. The one thing I do recommend, though, is you do talk to a trusted mortgage advisor, because they have access to different products that you might not be able to get at one lending institution versus another that might work better for you. And this comes down to, it's not just about the rates, but the product. We're here to find the right product that fits for that individual. So everybody's going to be slightly different, and then we kind of take it from there. Okay. Good. We're good.
Yeah, that's great. Got that one?
Yeah. Why can't I change slides?
Okay, go ahead. I'll wait.
No, keep going. There we go.
There's your example.
There we go. So we're going to look at an example of a consolidation. And this is, ironically, pretty kind of standard family that I even see. But you're looking at a mortgage, 25-year AM. Again, we're just going to use that 3% rate. We're going to keep to that $300,000 balance. Your payment's going to be just over $1,400 a month. Now, let's say you had a line of credit, $25,000. Now, we use the monthly payment of $750. So I do get it. Some people are just paying interest only. But in the eyes of a lender, it's 3% of the prepayment. So that's $750. Your credit card at $25,000, again, we use 3%. Minimum payment's going to be $750. You might have a car payment in there of $450. So by the time you're done, you're actually paying almost $3,370 a month, okay, in debt and mortgage, all right? So what we want to do is we want to consolidate that debt now, that $367,000, into one monthly payment and try to drop it to save the money. And this is where things really become quite a bit better. But your new mortgage would now be $1,577. So it didn't really increased by what, $160 a month, right? This improved the cash flow by $1,792 a month. So debt can be a very, very big factor in people trying to move forward and trying to get ahead. And like I said, the biggest challenge with refinancing is getting the 80%, is the fact that we can only go up to 80%. And a lot of people are right at that cusp already. And not that I want to mention this again, but sometimes the next option is to sell, restart, put the 5% down and buy something a little bit more in your means. That can work, right? As another alternative.
Like there's always one strategy leads to the other strategy. There's always an option, right? Yeah. And these are 5 typicals. And we do have the tools to work outside of these 5, but these 5 are sort of right at your fingertips that Rob's trying to let everyone know that these are available to you right now. You just may not be aware of them.
Yeah.
So,
and I always, and I don't know how many times we're going to probably say this through this whole presentation. This really comes back down to communication. Where the situation gets bad is when people leave it too far and they didn't see it. Like most people can see the writing on the wall, but they don't want to admit to it. It's really, the sooner you get in front of it, the easier this becomes to do, right? It's the guys that leave it to the last minute and I get the phone call and I'm in collection next week. I got to do something. I don't have money for the mortgage. You do not want to be in that position. You don't want to be like, that's where you don't want to be. You want to get right ahead of this so we can come out and get the solution. And like I said, go to your banks, guys. Like go to your lender, find out who it is. There's probably solutions out there that you don't know about that are available to you. Okay. HELOC is a fantastic product. I'm not a big pusher of it because I don't like line of credits too much unless you're responsible. You do need to be responsible. But it does have the lowest carrying cost in the market. It's harder to qualify for. But if you ever want a way to recession-proof your mortgage and understand, hopefully the slide goes through this, but if you have a $400,000 mortgage and you pay it down to $300,000, $100,000 becomes open into your line of credit. Okay.
Your HELOC.
Your HELOC. That's right. So HELOC is a home equity line of credit. So if you don't understand, there's a fixed portion, there's a variable portion, and that line of credit always fluctuates. So as you pay your fixed portion down, your line of credit portion goes up. Excuse me for 1 second. I'm just going to add somebody else in.
Yeah. And one, I'll just go on to explain, because I love the difference. I always love to explain this difference where that's the HELOC, right? So you're constantly have the flexibility of your mortgage going down and the HELOC going up, like more availability in it.
Right. So even if you got into a situation where you lost your job or you got laid off for 2 months, you can actually draw down from the HELOC to supplement your income. Right. So it's just a fantastic tool for this. Like it just, now I kind of go back and wish I'd sold a lot more. The only thing, like I said, HELOCs, you tend to get a slightly higher rate with them. They're harder to qualify. But once you're in, you're in. And it's just a fantastic product for something in this situation. We use them a lot for wealth programs because it's a great spot where we could pull equity to purchase another home without having to refinance and go through the legals again. The equity just consistently builds up as you pay down the mortgage, or as that renter would pay down the mortgage.
And let me just finish the explanation, because that is perfectly right. But I always used to get them confused with the secured line of credit. The secured line of credit is a completely different product, which is still based on the equity in your home, but it is fixed, right? Like it is an amount.
Yeah. So your secured line of credit might just be fixed at 100,000 or 50,000, whereas the HELOC, your line of credit portion does go up as you pay down the fixed portion of your mortgage. So you're always there for that dollar amount. So like I said, if your mortgage was 400,000, it'll always stay at 400,000, even though your equity portion could be going down, but you always have that 4,000 available to you, right? One way or the other. So you don't have to requalify. Costs do vary from lender to lender. I know on our end, we do cover appraisal costs and stuff like that, but there are legals to set it up. And typically there's, like I said, the appraisal we would pay for. It's one of the features we've always added, but it is something that's in there to look at, especially moving forward. If your mortgage is coming up for renewal, you may want to consider a HELOC product versus just doing a switch or a transfer. Just something to secure yourself through if we do have another wave, right?
But don't miss a mortgage payment, because if you miss a mortgage payment, you no longer qualify for that product.
Definitely not. Yeah. Again, we always say discuss with a trusted advisor. These are not simple products, just to let you know. So it is something that needs explanation. It is something that you should be aware of what you're getting into, but they are good, right? So they do work a little bit different. Okay. So we're going to talk about an example with the minimum payment down payment difference. So let's say you had a balance of 100,000 on a line of credit, 100,000 on a credit card. And this is the difference of a HELOC, by the way. So HELOCs are normally sitting around prime minus, prime plus, well, usually prime plus. And this is actually current to date. So if you're to get a HELOC, you're probably looking at about a 2.95% interest rate. Okay. So that's open money. Keep that in mind, right? So that's pretty cheap open money. Your credit card is going to be between 12 to 25%. I know some lenders have been starting to bring that down. And by the way, that's another thing. It should be that as number 6, but go to your bank and ask for your credit card interest rate to be reduced. Yeah. We'll add that in later. Number 6.
Bonus tip.
Bonus tip. So, but your minimum payment on the line of credit on a HELOC would be $250, whereas your credit card payment would be $1,000 to $2,000 a month. So again, you've got a pretty good savings there, $1,750 a month up to, right?
Yeah.
So, like I said, great product, secured line of credit. You could use it too, but it's not as effective. The HELOC definitely does have that option to it. And you know what? I'll put this one out here. Manulife's probably got one of the best HELOC products. Somebody's going to comment on me now for saying that, but great product. I love it. So the beauty one, renew your mortgage early. So this is actually, a lot of people don't realize you can do this, but if your mortgage is coming due in the next, 4 months, you can start, but usually even up to a year, I have seen a lot of lenders that will do an early renewal without paying, without a fee. Okay. So this is something you do want to be careful of, because you don't want to get caught in a higher rate. So this is why I've had a lot of clients come to me and say, my mortgage coming for renewal in 6 months. I got the renewal papers from the mortgage company. And typically I usually say to them, well, you know what? I wouldn't renew yet because rates are going down and they're just trying to lock you into a higher rate. But this might be a great strategy if you're, might not get employed down the road, or you're getting laid off, or you don't have the equity. So this could be a little bit of a game you might want to play with your lender and say, yeah, you know what? I want to sign in now because now I'm locked in for the next 5 years, right? And rates are fantastic right now. There's nothing you could do. Like we're probably hitting record low rates stepping into it, and they're probably just going to go down further as the summer continues. So something you definitely want to look at.
Rob, can I ask you, so if someone were to do this, and let's say they were in a fixed rate and they wanted to go to a variable or vice versa, can that be changed, or is it just signing at whatever they offer?
Yeah, so normally when we get those renewal options come out, the renewal will usually give you like a 10-year, a 7-year, a 5-year, a 4, 3, 2, 1 open, and a variable. So you can pick between any of them, and they tell you what the cost is monthly going to be. And also keep in mind, if you do get those renewal papers in, don't take the first offer because they're normally going to come in high, right? Hoping that you do sign back early. Okay. So there is
people think that that's the only option. You and I just had a conversation with someone, and that's what they thought. That's the only option. What do you mean? It's here. It says sign here.
Pick one. Yeah,
you can actually contact them.
Yeah, you can negotiate those rates down. And I can tell you right now, the main 6 will probably always come back with the highest rate they can possibly get in the hopes that you will sign back. Okay. Most of I'm going to say this word, monoline lenders or lenders outside of the big 6 in that A space, they're usually very competitive. They usually come back with their best rates. There's usually not much competition, usually. Okay, but we can go down. Nice that Melissa left us. Thank you.
Sorry, I'm here, but I was getting in the dark. Like I was disappearing.
No problem.
So I was listening to you.
Yeah, so you do want to ensure that the low rates is you want to make sure that you are getting it. And mortgage is certainly, this is uncertain time, so it is a great time to lock in for another 5 just to kind of secure. And let's face this, for everybody else that's in here, rates are going to go up. Okay, that is unavoidable. Now, when it happens, it might take a year, it might take 2 years, but it's probably going to happen. So locking in is not a bad thing, and it's going to happen in the variable. It's going to happen, and I could probably do a whole new seminar on why rates are probably going to move up and what's going to happen with inflation, and get into the whole economics of, unfortunately, with what this quantum easing has done. But we are in for a little bit more of a rough road. It's not just over. So you want to secure that mortgage payment and make sure nothing's going to change. The cost to do this is usually nothing. I usually very rarely ever see a cost to do this. If it's available to you, your mortgage has to be coming due in the next 12 months. And you know what? Again, reach out and see if it's an option. Okay. It's something, reach out to your mortgage broker. Maybe your mortgage broker can find out if it's an option. Okay. To do it. So here's some tips. So have your offer from your lender reviewed by someone who does not work there. So I always say, hey, if you have an offer, I don't mind. Send it over to me. Send it over by email. I'll look it over. I'll tell you if you're getting a good rate. I'll tell you what you're doing, and then you can go back and sign it. I'm not going to charge to do that. Hopefully I don't get 100 of these, but I'm assuming that that's because all of a sudden I'm going to be working for the next 20 years. So,
I know where he lives, so send them to me and I'll bring them over.
There you go. But you know what? Have somebody else review it, because chances are the renewal offer is not going to be the best one the first time. Okay, so you can negotiate, like I said before. Now, here's the big one that everybody's been using. Everybody's been talking about it. I don't mind the skip a payment option. It does usually get tapped on the back, or the deferral program. But one thing that you do, and it's really hard for me to touch on this because every deferral program is probably different from bank to bank to bank. So nobody's really being clear about this and how they're charging it and where they're going to add it. I will promise you this. Banks are here to make money, okay? Their numbers just came out a week ago. They did not lose money through COVID, okay? They didn't make the money they hoped to make, but they're still going to make money. And they have to please their shareholders at the end of the day. So this is really there to kind of offset and help people. But I think what's going to happen is when the deferral program comes to an end, a lot of people might be in for a little bit of a wake-up call. And this is where we're either going to see, as much as I hate to say it, but you're either going to see people forced to sell, or they're going to have to refinance if they have the equity, but or they're going to have to look at other options, maybe increasing the amortization. So all those steps that we just talked about may come into play only because they need to get the payments down. Okay.
And just to qualify, we're not saying wait until that time. We're saying these are options you could go right now to your bank.
Yeah, like if you're in the deferral program now and now you're back to work and you can make your payments, I would definitely get out of the deferral program and stop using it, because that's just going to increase your overall monthly payment to a larger amount down the road. And from what I've understood, I've heard some of them are adding it to the back end. One lender actually I heard it was one big lump sum was due in August. I can't see how that's going to possibly work. But the majority of them, if you had 36 months left on your mortgage, they were going to average out those payments and add it on to those mortgage payments for the 36 months you have left on your term, as an example. Okay. And a lot of people, unfortunately, that are into this deferred program, like a lot of them are still in insured mortgages. So the equity is not there in the house to do a whole lot. And that's one of the biggest things that's scaring CMHC is that, okay, if we do have a market correction and these deferred payments start getting added onto their mortgage payments, we won't have the equity to come back and support the taxpayer. So it's, I could see where they're coming from, but on the other side too, I certainly don't want to see the 10% minimum down payment get introduced either. So these offers do differ from lender to lender. So it is something, I know a lot of people signed into these things very quickly without doing their due diligence and their homework. But it's something now, hey, you know what, if we finally slow down, you might want to go back and say, okay, how is this deferred program going to work for me? What do I have to do to pay it back? How is it getting added onto my mortgage? Do I have any other options? And I think you need to really look at it. And some people, there's just not a choice. Okay. And it worked for them. Okay. And these were
Rob,
sorry, I'm not freezing up, am I?
sorry, you were just for a second, but that's okay. I wanted you to stop talking so I could ask a question.
Let's go for it.
Okay, so I've had people inquire with me, doing the deferral program, is that going to affect my credit rating? Does it?
Okay, so there's a really good question, by the way. So the answer is no, it will not affect your credit rating. Okay. One thing that I have heard though is because so many of them happened in such a short period of time that some mortgage payments might have been missed in the beginning and then they were picked up a week later, and it might hit the credit bureau. Okay. So this is just a tip to some people out there who might have used the deferred payment. It might be a good idea to check your credit and make sure that that payment didn't get hit so that you can go back and have it corrected. So Equifax, TransUnion have come back and said, listen, contact us, we will correct it. All right.
Okay, good. That's a major tip.
That's, yeah. So check for it. Make sure you didn't get hit on the credit bureau with it. Do their due diligence, even Credit Karma or whatever they are out there, they could probably figure it out. But you don't want to be doing this 3-4 years from now. Okay. You want to be doing this now. So that's a great point, by the way. It's not there to affect your credit, but I do know some slip through the cracks. And I know it's one of the issues that some people were talking about. And the credit card companies, help me out here. What's the name I'm looking for? Equifax, TransUnion, those guys.
Oh, yeah. Credit bureaus.
Thank you. We'll be there to help you. Drew a blank. You wouldn't believe. Okay, so that is something. So they will help out. They are there to assist, and they are aware of it. Okay, so going back to the deferral program. So keep in mind, all lenders are different. So whatever you read on the news might not apply to you. So go back to your lender, find out exactly how it works, how it's going to be added on. It was offered on a case-by-case basis, but I also know a lot of people did slip through the cracks and maybe shouldn't have had it done, did get it done. Applies to mortgage payments, not property tax installments. So here's the other thing too, by the way. You still have to pay your property taxes. That's not going to stop. Okay? If you had life insurance on your mortgage, that's not going to stop. So those payments will continue, even though your mortgage payments have stopped for the 1 month, 2 months, 3 months, 6, or up to 6 months, however long you decided to do it for. And it does say on here, no credit impact. But like I did mention before, I have heard, I have not seen it yet, but some people's credit was affected by it. You can go back and get it corrected. Okay.
Some people aren't even aware, even though they signed, because there's always lots of papers in front of you, that their property tax is rolled into their mortgage payment.
Yeah,
So in wherever they've agreed, and they may not be aware. So make sure you're aware of that.
that's right. And those property tax payments will continue to come out monthly, so that or biweekly, or however your payment was set up. And they say also for these programs, I know like the lenders I tend to deal with, they didn't care about the skip payment. Anybody could use it. It was available to them. But some might require proof of distress. And this goes back to the amortization too. So maybe a bank doesn't allow you to increase your amortization, but if you can show distress, they'll probably actually do it, right? So it's just a matter of going out and asking, and that'll decrease your payment. So, back to this. I know we're going to probably hit this every 2 or 3 slides, but it really comes back down to communicate, right?
Yeah.
Don't leave anybody in the dark, and you will probably get through this fine.
And you are not alone. You
Mhm.
know, we're isolated to begin with, and nobody likes to go through these money issues, but know that you are not alone. And I mean, there are so many people going through it, and so many people that have the questions. One of the things we said when we did this, questions, if people aren't on the show, they're going to come up that other people are thinking, so don't feel alone. Like you've got support.
That's right, and and definitely not alone. Like the numbers are out there. 800,000 people applied for the deferred program in the month of April. So that's a huge number if you think about it. You may have approval from your lender before skip a payment too. So like I said, a lot of lenders didn't do the skip a payment, but pretty much all of them are now as an option. It's usually only good for 1 or 2 months, but it does get you through the quick time, right? Okay. Now, yeah, and here's something people need to realize is put it right out there. It's a
Yeah.
deferral program. So sooner or later, you do need to pay it. So it's not a mortgage payment deletion where you're getting a gift and you don't have to pay it back. Okay. Somewhere down the road, you're going to have to pay it back. And not only are you going to have to pay it back, you're probably going to have to pay it back with interest. Okay. Not probably, you will be paying it back with interest. It's going to get tapped on somewhere. So, and I think that's where a lot of people were just thinking, all right, I got a 6-month free ride, but it's not. You're actually going to pay for that free ride. Okay. It's not a freebie. There we go. Deferrals may be offered up to 6 months at a time or on a month-to-month basis, depending on your lender. If we do have a round 2, it's going to be interesting to see how this goes coming further, right? So to me, the deferral program, skip a payment option should really be your last resort if you can do the increased amortization that we talked about, or if you can refinance, or if you can look at the HELOC. Like all those are much, much better options than the deferred payment, because this one's going to cost you down the road. And I think this is where the wake up is going to come in the fall. And I think this is what has a lot of government officials and a lot of like CMHC in general. I think this is what's starting to scare them a little bit. It got us through the short term, but the long-term effects could be devastating if we're not careful on how this works. And guys, be awake with what's going on. Be aware of your mortgage, understand your finances, and ask the questions. And I always said, we'll put it out there. Contact Melissa, contact myself. We're here to help. We're here to answer any questions you might have. At least try to direct you into the right direction. Okay. Okay. So back to those 5 strategies we talked about. So adjust your payment, refinance your existing mortgage, right? We talked about that one. Add the HELOC. I love this one if you can do it. Renew early if it's an option. Again, your mortgage has to be pretty much coming due in the next 12 months, or it might not even be an option. And we have the skip a payment and the deferral option that's out there, which is still out there, still available if it's needed. And I think we're going to go right to questions. Can we go to questions? Yeah.
What would you, so you were saying that you would do the deferral last, obviously it's got the biggest implication.
Mm-hmm.
With the reamortization, I don't know, I just love that one because I have not heard that one very much out there, right? So I really like that option. What is the best one that you see, or the easiest, or the first one you would attempt? Or will it be different?
I think it's going to depend on the situation. I'm just going to question you. Are we on mute? I'm just going to mute just in case anybody has.
Oh, the people are on mute. Yes.
Yeah. So anybody has any questions, you should be able to put it in the chat room just in case. That I know I can definitely read and answer your questions, so you're not put out there. So I just want to leave it out there. So you're going to go back. The first one I would probably, it depends on what your mortgage is and where it's at and what you're doing, on whether or not what options are your best one. And this is where, again, come forward. Like I love the amortization because it's a quick and easy one. if you're in a biweekly accelerated, fix that one and get it to it so it's not accelerated. These are quick and easy methods that you can use, okay? The refinance can be a costly one, but if you're sitting in a lot of debt, that might be a really good option. You might want to consider paying the penalty, get out, redo it, and restructure the mortgage so that you've got a lot more breathing room. That one's probably the most effective, depending on your
Can I ask on that one? Let me just ask, is there a penalty when you refinance if you're
Absolutely.
only, let's say, 1 year or 2 years into your 5-year term?
Yeah, and depending on the bank you're with, it could be substantial. This is one of the reasons why I use certain lenders over others, because we know statistically most people don't stay in a mortgage for more than 3 years, right? Before they end up doing something, whether it be a port, whether it be a switch. And even though they might swear up and down, no, I'm here for 5, chances are they're not going to be there for 5. So I'd like to make sure that the product that they're in has a very low penalty, or it's easy to port, or we can refinance it. Sometimes we can refinance in the existing mortgage, but there's some lenders that won't do it. So it really comes down to who you're with. Is it an option? You're still going to get legals. You're still going to get appraisal.
Okay,
Regardless.
so there's cost to that one then, for sure.
Yeah, there's still going to
Potentially.
be a cost to it. Yeah.
Potentially. Okay, sorry to interrupt. Yep.
No, go ahead. This is question time. So if anybody's got a question, feel free to.
If anyone has any questions too, we can unmute if they want to talk, or they can chat in it.
I tried to unmute. I couldn't get them to unmute, but you can definitely put up a question in the notes section on the bottom here if you want to put something in the chat.
Oh, you had excuse me. You had an option to unmute yourself.
Oh, so there you go. The answer is true. Thanks, Gus. I appreciate that.
Hello, Mr. Gus.
Hello, Melissa. How are you?
Good, thank you.
Very informative session. Thank you.
Mm-hmm.
Good, good. Do you have any questions?
Yeah, is it really worth doubling up on your mortgage at this time?
When you say doubling up, you mean doubling up the payment?
Yeah.
Or doubling up the mortgage amount? Like I can
No, I'm sorry. Doubling up the payment.
With the interest rates being as low as they are, it's not something I would do, right? I'd rather try to keep myself as liquid as possible than paying down a mortgage. Now, if rates start to get up to 6-7%, absolutely. But right now, you're just paying down more principal than you are interest, and you want to keep yourself in a liquid situation, right? Again, everybody's different. I don't know where your scenario is either. You could be retiring in 5 years and you want to be mortgage free, and that's your goal. So maybe that is the right answer.
Gus knows there's no such thing as mortgage free. Then he comes to see us and we
buy multiple. Yeah, I get you. Poor Gus. Any other question, Gus?
Yeah, so if you have liquid cash, you said, is there any investment opportunities?
Not that I was going to bring this up in the seminar, but one of the things, at least see Melissa's already smiling because she knows what I'm going to say right up front, and there's Susan doing the same thing. But the investment opportunity that's come out with the wealth program and with buying rental properties right now has been unbelievable, because the amount of renters that's out there in the market and the quality of the renters just in the last 2 months has been absolutely unbelievable. So I've been telling people, if you ever want to become a landlord, now is probably the best time to do it. And people are saying, but people are getting laid off. They're getting served. They're getting this. Like, we haven't had one tenant that skipped a payment. Like, it's no different. And the quality with the prices and the interest rates being so low, the quality of the renters right now, the demand in housing prices, even if we have a correction, it's going to be so short-lived. I don't even think it's going to be a blink. It's going to be over within a year. So if I'm putting my money somewhere, and I'll tell you right now, I am, because Melissa, I bought a property.
Must be nice to have the down payment. That's the only thing.
You have to have the down payment or the equity in your house to be able to pull the down payment to do it. But the opportunity is there. And you know what, there's going to be people here that might be listening to this, and I hate to say it, but there's going to be people here that are going to be able to take advantage of this opportunity. And there's going to be people who are going to fortunately have to try to rebuild. And if there was, and I hate saying this even more than anything, because the wealth gap in Canada is already getting bigger and bigger and bigger. And one thing that COVID-19 has probably just done to us is made that gap look like this. And we're going to be in a situation where the ones that fortunately were essential are now going to be up here. And the ones that were non-essential or business owners are now falling behind. And now we're going to have to play some catch up. And it's really not fair what just happened, but this is the reality. And I went back into 2008 when we had the big market crash there. Like I went around and I went talking to a lot of people. This is the time to get into the housing market in the US. If you want a US property, go buy them, right? Pull your equity from your house and go buy it. And anybody that did it really came out ahead. And I hate to say it, they're taking advantage of somebody else's bad situation, right?
Mhm.
Did I just see that on video? But that's unfortunately how a lot.
I will unmute for that.
Mm-hmm. Go ahead.
Sorry, I will unmute for that one. It's all how you look at it, because honestly, people who are drowning and they are panicked and they can't sleep because they're so in such trouble, you're actually offering them a way out. And so that's the way I look at it more so, because you know what, years ago, before 2008, I've been that person. And when somebody makes that offer, it's like, thank goodness.
I'm out of there. Yeah. And
I
we're in
understand
that
what you're
situation
saying,
today.
but absolutely, it's a win-win that way.
Mm-hmm. Yeah.
Anyway,
and like I said, one of the things I mentioned, like if there's nothing wrong if you had to sell your house, okay? It's about putting the game plan together to get back into the market and do it again, right? And on a clean slate. What you don't want to do is wait too long. And if these 5 strategies can't work for you, then maybe that's the option. But you don't want to be in a situation where you've missed that mortgage payment, because that option now takes you off the table. You don't want to.
I mean, that's exactly, that is, I think maybe the top tip is do not miss a mortgage payment. We have someone we just talked to, Rob, and they have immense equity in their home and they're unable to access it because they cannot qualify because they have missed that mortgage payment. So avoid that at all costs. And I think the sooner that you start looking at these strategies, and some of them are very easy to do, the better, because you do not want to end up with a clump of people at the end and you find yourself in a situation where you cannot get out of it, and selling is your option, and so are 10,000 other people having to sell their house at the same time.
Yeah,
Get your
the whole
house
idea is to try to get ahead of that game. And like I said, Gus, is there an opportunity out there right now? Absolutely, there is an opportunity if you have the equity and the cash to do it. For those who are lucky enough to have that position, I would take the position, right? Like it's you need to get ahead. Yeah.
So Rob, here's my question then, or a follow-up question. I'm hearing rumors and speculations that housing market is going to go down by 20-30%. So is this really a good time, or should we wait a little bit longer?
Well, this is where you're going to play the game, right? So CMHC has come out and said that housing markets, and their most aggressive one, by the way, to date was CMHC's, said they were going to put it down by 20%. That's what they were predicting by fall. And the reason why they're saying that is because of the deferred mortgage options that have been put out there. And they feel that a lot of people are going to get caught with that payment and be forced to sell their house, right? So the whole idea of putting this program out there was to say, okay, we have other options. Let's deal with it now before you get to that 6-month mark and all of a sudden you're in a position where you got to sell your house. We don't want you there, right? We want you to keep your home. But a lot of people aren't going to watch this video. So it's going to happen, unfortunately, right? So it's going to be there. The one thing I will always say, do I think they're being overly aggressive with this? Yes. Okay. CMHC did come out and they did say that, this is a possibility. It could happen if we do have a second round. They are looking at increasing the down payment from 5% to 10% for first-time home buyers so that they can decrease the demand, which would definitely, I think, would take the market down just by doing that move alone. I think it would be one of the biggest mistakes that they could do, but that's not my decision, right? So it is on the table. It could happen. And you know what? And if you're an investor and you're waiting, you could wait it out to say August, September, October, and you might grab a good deal because we just knocked out a lot of buyers, right? And you got people who are forced to sell. And not only that, you've just increased your rental market exponentially, right? So now you've got quality renters in the market looking for a place to live. They can't afford to buy because now the down payment minimum is 10%. The market's dropped because of it. So if you could see the light, there is a good possibility here that come fall, we may have a great opportunity in front of us. And we could turn around and say that we might not, because right now we're also looking at a market where demand is extremely high, prices are going up. So as much as you might hear that prices are dropping, they're not dropping.
I was just going to say, Rob, there is, and that will be a clear MLS realtor.ca advantage when you get to that point. But there are advantages now because people are sitting in their homes. They're not selling their house. They don't know what to do, but they would welcome an offer like that. I mean, just myself in my investment side, I've been door knocking because, or sorry, not door knocking.
I was going to say, you better not be door knocking.
Don't arrest me. Don't arrest me.
We'll stop that record.
Good God. But actually contacting homeowners directly to see if that's a path that they want to take of selling, right? So there are those opportunities too. It's just how you look at it and how much effort you're going to put into it.
Yeah, it's really, it's a gamble, Gus. Like, I'll be honest with you. Like I said, I do know this. And one thing that CMHC did come down with is they're also stopping new builds up to 70%, have been a lot less. So they might be taking the demand out of the market, but they're also turning around and taking the supply out of the market, which is why if the market was to crash by 20%, I think you're going to see it go back up 20% in 2021. So it's a gamble you got to be careful with. And if they turn around and they don't do the 10%, you're probably going to be in a higher market come fall, right?
Yeah.
So the gamble is do you do it now, or do you take the risk and say, okay, CMHC, I'm going to be honest with you, I think it's a pretty ballsy move if CMHC does increase it by 10%. Like, I really do, but I'm certainly not going to rule it out because, like I said, it's not my decision. And some of the things these guys have done, I don't want to get into the politics of this, but some of the things they've done politically when it comes to housing, I'm trying to find the right words without insulting the government, but you kind of know what I mean.
But that's okay. But the caution that I always say, and Rob, you and I have talked about this before, is, and Gus, tracking, because I know, I get it. You want to get the best deal, but when you're trying to get the best deal, remember our little diagram, Rob? And like by the time, like you tell me when it's reached the bottom, and by the time you've told me, it's already gone back up. So I think you constantly want to be looking at each deal, like what opportunity is in front of you, how much can you nail them down? I know Gus would say it that way. How much can you get them down? And is that a good deal based on what you want to do with that house? If it is at this time, forget about if there's a better one down the road. If this one checks all your boxes, then you do it. Because it's housing, right? It's ebb and flow.
Well, you know what? End of the day, I'll put it this way. If you're there to hold on to the house for 10 years, you're in a no-lose situation. Right? I just put my foot in my mouth by saying that. But I can't see how anybody could possibly lose over a 10-year run by buying a house today, or even buying it from 6 months from now. Like, it's the market's not going to go down that much, and if it does, it's not going to go down for that long. So in the meantime, you've got a renter paying your mortgage, and you've got a really low interest rate at the same time doing it. So
That clears my guts.
Oh, what's that, Melissa? You want to sell me a house? Is that what you said?
You betcha, buddy. I said, is that clear as mud?
It absolutely is.
So it's opportunities there, Gus. That's for sure. There's no question about that. But I appreciate the question.
No, thanks for the answer.
Yeah. So you know what? When there's a downside, there's always an upside somewhere. You just got to find it. That's the way it is.
Yep.
Where do you want to go for it?
So can I ask a question? You were offering, Rob, to review everyone's documents. So make sure hundreds
renewal
of
documents.
Yeah. Just the renewal document. How do you get paid? How do mortgage brokers get paid? Because everybody thinks you're a crook. It's true.
There it goes. It's in the open now.
I know.
Okay, so a lot of people don't understand this, but you know what? Let's put it out there on the table. We do get paid by the lender we do the business with. They pay us a referral fee or percentage for the mortgage amount, right? Not like realtors who get paid on the full price tag. We only get the mortgage amount, which is a lot less.
Talking about mortgage people, so
I had to throw that one out there, and I'm pointing to you. So,
yes.
but that's how we get paid. Now, alternate lenders, we do charge a fee. Okay, so I'm not going to put that one, because you always hear about these guys charge fees, blah, 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 blah. Private lenders, we're going to charge a fee. And what's an alternate lender? So an alternate lender is somebody that we would go to because you don't qualify at a bank. Okay, so it's technically private money or alternate money. We call it alternate lending. Alternate money is what it is. They're a little bit stricter. They're more on property. They don't care so much about the applicant. They do care, but not as much. And we do have to charge a fee for that because they don't pay us. Okay, now every mortgage broker is a little bit different. We can discuss the fee. It's negotiable. I didn't probably tell you that, but it is negotiable. And I've seen some guys charge up to 5%. Usually, typically, I charge 1%. So it just depends on how greedy they are and what they want, what they're looking for. My idea is if I have to take you to an alternate lender, it's to clean you up so I can get you back into a proper lender, right? That's really the ultimate goal at the end of the day. There you go. Does that answer your fee question? We get paid less than realtors.
Yeah, whatever. There will not be a sequel of this. Oh my gosh. All right. Okay, so we talked about that. So yeah, does anyone else have a question? That was great. I think that was really, really helpful.
Yeah. Melissa will never ask that question again.
No, I won't. But it's true. People do think you're a crook.
Yeah. And we get paid less.
Okay, we're done talking with it. So I think that this was great information, though, that honestly that you brought forward, Rob. There were things that, and we talked a lot, and we hadn't even talked about those. So they're going to be beneficial for someone. I encourage anyone who's watching the video, share it. Please share it. This is information. Like I say, we're not soliciting you for anything. We are literally trying to give you this information because we want the industry to continue. We want you guys to have some hope. Mm-hmm. And if you don't, even after watching this video, if you're unsure of what to do, reach out, okay? We'll have my information and Rob's information. Make sure that you reach out. And we've got wonderful Susan Pierce there too. So mm-hmm. She'll be helpful too. But definitely reach out. And if we don't know the answer, we're definitely going to find the answer for you. And Rob's going to be a great resource for that. So
absolutely, reach out. We'll make sure our contact information is at the bottom of this. But we are going to post it on Facebook. I think we're going to put it back out to the database too.
Yes, yeah, I'd like to.
At least a link to do it. So we'll have that out in the next few days. All right.
Yeah.
Perfect. Hey guys.
Thanks so much, Rob. Oh, go ahead, Gus.
I joined late. So is this? I know it's being recorded. Where is it going to be posted, and how can we access it?
I'm going to post it on my Facebook page. You, Gus, because you're in my database, you're going to get an email of it.
Okay.
And then Rob will have it on his as well.
Yeah, so it'll probably go up on YouTube, and then you can view it on the YouTube. There'll be a link to go onto the YouTube page because you can view it because it is just about an hour long. I'm just kind of looking at it right now. Yeah. So it might be a pretty big one to put on Facebook, but we'll definitely put the link on Facebook so you can view it at any time. And through the database, we're going to resend it out. Okay.
Perfect. Thank you.
Excellent.
Great. All right, guys. If that's it.